What's going on? It is your boy Solo E, and in this video I'm going to be showing you how to build a small account. But get this, it's not clickbait, it's not anything that you guys typically see on YouTube. Physically, literally showing you guys me growing $500 account all via YouTube live stream. So if you have not subscribed to my channel, make sure you do. But in this video I'm going to be breaking down step by step on one of the strategies that I am using to help grow this account. And this strategy right now, obviously, as you see in my trading journal, has 100% win rate, but of course that will change. But grant, this is my second best strategy I use to grow any account size, and I'm literally doing that all on my via YouTube live stream. So let's go ahead and get straight to the video. First and foremost, it's kind of crazy how this liquidity phase strategy is already blowing up, and I only mention this only in my YouTube live streams or only mention it in my actual community. I literally seen somebody right now already created an entire bot, my liquidity phase strategy, and also my other strategy, 3-man standing strategy, which if you haven't already watched that video, link is in the bio and also is pinned up here as well. Anyway it goes, let's go ahead and talk about this liquidity phase strategy, because this is one of the best strategies to trade gold, to trade any commodities, to trade anything that is in mad consolidation. So you don't get trapped in the market, you can still trade this. So what is liquidity? Basically, I refer this to a pool of money. If you think of a swimming pool full of fish and they're trapped in the swimming pool and they cannot get out this swimming pool because there's just no way out, what happens is there's going to be sharks that's going to come along in this swimming pool, and basically in this swimming pool of fish, they're going to get eaten up because they got trapped. But how did they get trapped? That's the most important part. Basically, how they got trapped was simply by looking at whatever food they like to eat. So we're just going to throw shrimp in here, right? Let's say fish love shrimp, right? What they're seeing is shrimp. But in reality, when they head into that actual pool and once again they got trapped inside of this pool, they realized this shrimp was fake. So they realized they got finessed, right? So this is how I like to break down the liquidity pool, or basically just liquidity in general. It is a pool full of fake money where buyers and sellers like to come in there to take the money, or it can even be real money, but to take the money, they either build more liquidity or they grab the liquidity. And this is literally what it is. When we are looking at a liquidity pool or possible liquidity zone in the actual trading community, it's as simple as seeing multiple wicks in the same area, right? If you notice how your supply demand areas are drawn out, or your support and resistance areas are drawn out, you're basically drawing it out in an area full of consolidation. So when we're looking at liquidity, we're basically referring to a lot of these wicks that you're seeing. So let's talk about what this can look like in the market. So let's say that we have multiple wicks and we're focusing on just pretty much really only the wicks, not the body. One thing about liquidity is if you notice there are either multiple wicks or either a long wick, which would be as simple as this. So if we were to take out this one candle right here and extend this wick out further down, this is now telling us there is liquidity left here. So in reality, just like when I refer to the pool situation, there's money left inside here that banks, algorithms, they need to take this money. This is where sometimes you might see this term that I used to hear about a lot in the earlier stage of trading, this stop hunt, right? A lot of people say, oh, I just got stop hunt, or oh, buy stop, or sell stop. Well, essentially that's really what this is. When I trade a lot of wicks, or when I see a lot of these wicks, I don't actually think of it as, oh, it's just a bunch of buyers that got rejected and the sellers are in the market, let's buy it. Because a lot of the times market will head right back down to that same ground zero area and then start heading up. And the reason being is because this is liquidity grabs or liquidity. Now that y'all understand the simple terminology of liquidity broken down solo terms, let's talk about what a liquidity phase is. So a liquidity phase is when you see this in the downwards trend and also in the upwards trend, meaning that if you were in an area of what I like to call consolidation, and you see multiple wicks hitting here as well as multiple wicks hitting here, this is what we call liquidity phase. When we refer to a liquidity phase, we're actually referring to phase 3 to phase 4 and even phase 2 of whack-off theory. If you don't know what whack-off theory is, comment down below, say Solo, please drop that video because I don't know what you're talking about. That's where this whole liquidity terminology, liquidity phase is coming from. It's basically just whack-off, just simplified in my terms. So if we notice that we have multiple wicks up and multiple wicks down, this is what's 99% of the time is going to happen. Whatever strategy you guys trade to or refer to, if you know me, you watch my previous videos, the 3-man standing strategy, if you might by any chance see the market's going up and pulling back down, you can can just say that's invalid because 99% of the time it's going to do this liquidity phase. It's going to go either one direction first, go down, let's say drops. After that, a lot of traders are taking a lot of market execution, selling orders. In my eyes, I see it as simple as, oh, you know what? Nah, I'm about to buy it because even though we took this liquidity here, they're not just going to go chasing down price until they take this money here. Let's say that we got $1 billion right here and we have $1 billion right here. As a banker, and that's somebody that's here to make money, why would I leave that extra $1 billion knowing that I can get to it? So what I am going to do is take this $1 billion here, but before I actually continue to go back on track, I am going to take an additional $1 billion because obviously I see it. And then after I take that out, I'm then now going to drop. That's where this whole liquidity phase strategy comes in play. This is probably my highest win rate strategy, but I don't take a lot of trades with this strategy because of the pairs or the assets I trade. But if I was to trade like a gold or trade something like a Forex pair, which is very consolidates very much, this strategy would be perfect for you guys. But for me, 3-man standing is it because it is based off a trend. So that being said, this is one of my favorite strategies. I just don't use it too much because I don't see it too much in what I trade. Now that you guys understand how this works, let me show you one more other thing. Now, this can be seen diagonal, this can be seen straight, it can be seen any type of way. It can even be seen diagonal while the bottom part is straight. It's almost seen as a wave pattern, right? If you trade wave patterns, or if you're an Elliott wave trader, or you trade anything like that, you are probably familiar with a lot of these open triangle, closed triangle, ascending triangle, or flags. Yes, that is 100% accurate. If you can trigger your mind to see it a little differently, when you notice you got a lot of wicks, you can almost see it come up and then come down and then go up, which this now becomes what we call whack off, which is known as reaccumulation or redistribution. If you guys, like I said, don't know what I'm talking about, referring to, comment down below. Let me know that you want me to drop that video and I'll definitely create that. Let me show you guys this in the live market so you guys will know exactly how this works. All right, so here we're looking at US 30. Now with US 30, basically we have a liquidity phase going on. How do we have a liquidity phase going on? Very simple. Notice here we have multiple wicks. We have wick 1, wick 2, wick 3. This is referred to billions of dollars being left here where banks, bankers, smart money, whatever you want to call it, they need to come and take this money out. Additional to that, there's also money left up here. So before you guys say, oh, we got to break a structure, change of character, and you start selling it, you realize markets are going up, and then now you're like, oh, we got strong engulfing candles, let me buy it. This is where this strategy makes so much sense, and why, like I say, right now you guys see our account is at $6,600 from a $500 account. This is one of the strategies that, like I said, I use faithfully to trade, especially on my live streams and also just overall in the VIP. After market decides to create this type of reaction, it will usually head back the direction it initially broke through first. So what I mean by that is if market was to head up first, let it head down, and then most of the time it will head right back up. Sometimes that doesn't happen, but what will happen 100% is it will take the high and the low at the same time. So this is the liquidity phase that I have to preach about, and I see people making now bots over it. Make sure you guys shout me out, I would appreciate that. But at the end of the day, we took the highs out or the lows out first because we had billions of dollars resting right here, $1 billion resting right here, and we had another billions of dollars resting here. So we took that out as well, and then after that, US 30 decided to drop. So this right here is pretty much how you guys can take this same concept in your style of trading and implement this. So if you trade gold, NASDAQ, US 30, GU, EU, anything like that, you will 100% see liquidity phases, especially in a manipulated pair, because manipulated pair is another form of us looking at that as far as a theory called whack off. And if you guys don't know what that is, you can search it, or you can have me talk more about that in a little bit more details. But if you guys have not subscribed to my YouTube channel, please subscribe to my YouTube channel, because on my YouTube channel, I discuss everything that you need to know about trading and also about growing small accounts. But most importantly, man, I show you guys real proof. I don't just say I'm doing a video, I actually show you guys via YouTube live, so you can actually see the mental that a trader goes through when he trades. So that being said, if you guys want to get access to my prop firm that I use, which is Funder Pro, you are now able to use your credit card and debit card to go ahead and get initiated, started with Funder Pro. So this means you don't have to worry about any crypto payments. You can tune in with Funder Pro right now now by typing in your credit card information. That link is in the bio, so you definitely want to make sure you check it out. And if you haven't already, make sure you subscribe to my YouTube channel and sign up with the broker that I'm using to trade and grow this account, which is Osprey FX. Your boy Solo once again. I appreciate your boy. See you guys in my next video. Peace.